as milder temperatures continued to blanket U.S. forecast maps over the weekend, suggesting weak weather-driven demand could persist well into December. Nat gas futures were trading sharply lower early Monday. The weekend weather data failed to trend any colder and maintained light to very light national demand for much of the next 15 days. According to the latest forecast, the U.S. is expected to experience mild to slightly cool weather in the northern regions and dry, comfortable conditions in the south over the next week. This points to expectations of light national demand. U.S. nat gas storage levels are approximately 7.2% above the norm for this time of year, with working gas storage at 3,836 billion cubic feet, indicating an ample supply. Gas flows to the 7 big U.S. LNG export plants rose to a record 14.3 billion cubic feet per day in November, up from 13.7 in October and the prior all-time high of 14 billion in April. Analysts forecast U.S. gas demand, including exports, would drop from 130 billion cubic feet per day this week to 120.8 next week as the weather turns milder before rising to 124.6 billion with the coming of seasonally cooler weather in 2 weeks. Demand remains weak across Asia and Europe, influenced by subdued industrial and weather-related factors, discouraging a bullish outlook for the winter season. Contributing to this downward trend, prices for spot liquefied nat gas in the Asian market hit a 7-week low. Northeast Asian end users, despite low nighttime temperatures, are not actively participating in the spot market, relying more on term supply or previously secured spot cargoes. The average LNG price for January delivery in Northeast Asia decreased by 6% to $15.7 per million British thermal units. Despite cold weather conditions, muted demand and alleviation of global supply pressures due to recent maintenance and easing geopolitical tensions have played a role. The anticipation is for the weather to remain warmer than normal until mid-December, further contributing to the prevailing bearish market sentiment. Nevertheless, the persistent decline in nat gas throughout November may have come to a halt. European gas storages are experiencing significant drawdowns after just 3 days of negative temperatures, prompting questions about the adequacy of these reserves to endure consecutive days of freezing cold. The overall European gas storage tracker was at 94% on Monday morning. From a technical standpoint, the relative strength index is trading in oversold territory, suggesting that an increase in demand could be on the horizon. Simultaneously, tensions are escalating in Gaza as Israeli troops advance on multiple fronts. When coupled with the cold front in Europe, nat gas might see a rise, potentially reaching the $3 mark as a critical level to monitor. Just above this, the 200-day moving average at $3.11 could pose a temporary obstacle. Once bulls overcome the $2.80 resistance, attention should shift to profit levels at $3 and $3.11 on the upside. With the support of the $2.75 level no longer in play, a further decline may target 2 intermediary levels on the downside. The first is the line near $2.55, which triggered a bounce in early August. If this level proves insufficient, the summer low near $2.48 could act as strong support, especially with the RSI potentially entering a severely oversold regime by that point. Considering these indicators, the overall market sentiment appears mixed, reflecting a short-term bearish outlook coupled with long-term potential for bullishness. Thank you for watching. Please don't forget to support the channel if you enjoyed the video. See you in the next one.